Hello, it's Forex News for Thursday, November 19th, provided to you by InstaForex News team and me, Kate Tichina. The Bank of England, in its quarterly report about inflation, pointed that the weak bank lending will keep down the growth of the economic activity in the country for next 3 years. Moreover, the central bank pointed to the influence, which will render more decisive than it's planned now, measures concerning to the reduction of the state debt. Recently, the Fitch rating agency warned that Great Britain can lose the 3A credit rating if it does not take more active measures in order to lower its debt. Although the Bank of England forecasts were based on the announced plan, considering the decline of the budget deficit to fall to the 2014 from the level of 20.4% of GDP expected in this year, they have also took into account how the expectations of the more prompt consolidation will affect the consumer spending. By convention of the Bank of England, the inflation's targeted level is 2% in the midterm perspective. The central bank forecasts that in the case of the current policy maintaining, in the framework of which the key interest rate is at the record low level of 0.5% and the bank is realizing the program of the bond purchase at the cost of £200 billion, the consumer price inflation probably will be about 2% in 2 years. This period is usually used by the Bank of England in its forecasts. If the policy changes in accordance with expectations of market participants and interest rates start to increase from the third quarter of 2010, inflation will have to achieve the targeted level of 2% to 2012. This forecast points to the fact that the Bank of England probably will raise the key interest rate as quick and strong as investors had expected. The Bank of England forecasts that economic growth will resume in the end of this year, in the beginning of the next year, and will reach levels exceeding trends till the end of 2010 if the interest rates change according to the market participants' expectations. We'll be back tomorrow at the next release. Goodbye.